One of your borrower customer failed to service monthly interest in his working capital account. Which among the following is correct about the type of risk the bank is facing in this context?
Great thinking. Credit risk is the right choice. When applying the basic internal credit rating method to measure risk in credit activities, banks need to estimate which of the following parameters. Or correct response. Probability of default is the most accurate answer.
The bank implements a credit risk management strategy through distributing loans into many different industries to minimize which of the following risks.
Right choice. Concentration risk is the best answer.
Which of the following departments does not directly participate in the three-line circles of control in the bank's credit granting activities?
Correct. Accounting transaction is the right answer.
Regulating the percentage of borrowers who must have assets to secure the loan is to minimize which of the following types of risks?
Strong choice. Choice risk is the right answer. As per regulatory guidelines, up to which level in a rating scale, the rating shall represent an acceptable level of credit risk. Solid response. Levels 1 to 5 is a valid choice. Which among the following suits most the description? Possibility of losses associated with the credit quality of a borrower. You're right. Credit risk is the correct answer. In credit risk measurement models, which of the following parameters reflects the level of credit risk related to borrowers? And good thinking. Probability of default is the right answer. In accordance with the SOC of Bank Nagari head office, the credit risk management function is in the division. Nice selection. Risk Management Division is the correct and valid answer. Adjustments to the Credit Risk Management Implementation Guidelines include additional provisions related to. You chose implementation of credit risk management, and it is correct. Which of the following forms of credit is classified as off-balance sheet risk assets of commercial banks? Nice work. You chose bank guarantee, and it is correct. Which among the following is part of the building blocks of an effective credit risk management in a bank? Or sharp thinking. All of these is the right choice. The measurement model dash will determine the likelihood of non-repayment or decline in creditworthiness. Exactly. Credit risk makes sense and it is right choice. According to the Basel Committee's point of view, risks in banking business include the following types. Excellent choice. All types of risks mentioned above is the right answer. Which of the following credit handling measures belongs to the group of risk loss mitigation measures? Right again. Full credit risk provisioning is a valid answer. Reputation and standing of a promoter is assessed as part of which parameter under credit risk rating? Perfect. Management risk is the correct choice. Which of the following tools is not used in controlling credit portfolio risk of commercial banks? Well done. Interest rate swap is the right choice. The current law on credit institutions stipulates that lending to one customer must not exceed. Well picked. 15% of the bank's equity capital and reserve fund is the correct answer
What types of mistakes often occur during the decision and signing stage of credit contracts? A.
Smart pick. Answers B and C is the correct choice.
The function of credit risk management in providing credit risk analysis does not apply to.
Good job. Your answer A, B, and C are correct. Works well here. Rules of delegation in a bank's credit policy represents one among the following. Identify.
Great job. Powers to sanction loans by various functionaries is the accurate answer.
In working capital accounts, which among the given ratios is used to assess financial risk? You got it. Your choice current ratio is right.
Product approval or evaluation program should not take into account on the following risks.
Valid point. Operational risk is true.
Which among the following is a tool to measure the credit risk embedded in a loan asset?
Excellent. Credit risk rating is a brilliant choice.
Which among the following is not a parameter used for credit risk rating architecture?
Bravo. Basis risk is the answer.
Which typical credit process would involve under credit controls, review and analysis?
On track. Portfolio review and trend analysis is the correct answer.
Which one is the typical credit process would involve under business origination?
Well reasoned. Credit appraisal and review is the correct choice.
Which is not framework under maintenance of adequate policies and procedures?
Nicely done. Problem credits is a solid answer.
Which among the following is not a domestic credit rating agency in India?
Smart move. Standard & Poor's is an accurate answer.
What are the data challenges when building a credit early warning system?
Clear logic. Your choice, all the answers above is sound and 100% true.
Which among the following is not a credit information company in India?
Good job. Your answer Moody's works well here.
Which of the following affects transaction risk in credit activities?
Great job. All the answers above is the accurate answer.
Which is not availability of effective management information system?
Well reasoned. Monitor and control risk is the correct choice.
Pre-sanction credit process can be classified into how many stages?
Right again. 3 is a valid answer.
Which of the following is not a principle of financial management?
E. Excellent. Security is a brilliant choice.
Which of the following is not a board area of credit management?
Perfect. Credit special is the correct choice.
Lending policy setting the basic standards and procedures to?
Great thinking. Composition of the loan portfolio is the right choice.
What is the tool that used to monitor the quality of credit?
Valid point. Internal risk rating system is true.
Which of the following are the 3 types of risk management?
Well picked. 1. Systematic risk 2. Unsystematic risk 3. Regulatory risk is the correct answer.
Which among the following is not a credit risk mitigant?
Nice work. You chose pricing of loan assets and it is correct.
What content is mentioned in the bank's credit policy?
Correct. Both of the above ideas are correct is the right answer.
which is not an example of typical credit process. Clear logic. Your choice credit organization is sound and 100% true. Stages of pre-sanction credit process are: sharp thinking. Appraisal, assessment, and sanction is the right choice. The second function of credit is bravo. Liquidity is the answer. How you will get all these quiz questions in PDF books format. You're right. Contact Narayan Changder is the correct answer.